Take our lead, let's help you make your mark. Our goal is your satisfaction. Let us show you the way.
If a taxpayer's capital losses are more than their capital gains, they can deduct the difference as a loss on their tax return. This loss is limited to $3,000 per year, or $1,500 if married and filing a separate return. 22 February 2017.
Let's help you make your mark.
You can write off up to $3,000 worth of short-term stock losses in any given year. Stocks you hold more than a year are long-term stocks. If you lose money on these, you count this as a long-term investment loss tax deduction. 6 March 2019.
Let's help you make your mark.
Limitations on loss deductions. The amount of gambling losses you can deduct can never exceed the winnings you report as income. For example, if you have $5,000 in winnings but $8,000 in losses, your deduction is limited to $5,000. You could not write off the remaining $3,000, or carry it forward to future years.
Take our lead.
To deduct your stock market losses, you have to fill out Form 8949 and Schedule D for your tax return. If you own stock that has become worthless because the company went bankrupt and was liquidated, then you can take a total capital loss on the stock. 1 January 2021.
Take our lead.
In respect of any capital loss incurred by you, you have to show the same in your return of income to carry forward. Note that loss can be carried forward only when return has been filed on or before due date.
Let's help you make your mark.
The IRS limits your net loss to $3,000 for individuals and married filing jointly, or $1,500 for married filing separately. Any unused capital losses are rolled over to future years. If you exceed the $3,000 threshold for a given year, don't worry. 4 June 2020.
Take our lead.
Net capital losses in excess of $3,000 can be carried forward indefinitely until the amount is exhausted. Due to the wash sale IRS rule, investors need to be careful not to repurchase any stock sold for a loss within 30 days, or the capital loss does not qualify for the beneficial tax treatment. 25 May 2020.
Take our lead.
The capital loss deduction lets you claim losses on investments on your tax return, using them to offset income. If you have more capital losses than you have gains for a given year, then you can claim up to $3,000 of those losses and deduct them against other types of income, such as wage or salary income. 15 February 2017.
Let's help you make your mark.
If you sell stock at a loss or hold on to it as it becomes worthless, such as through a corporate bankruptcy, you can claim a capital loss on your taxes. A capital loss can offset stock gains or any other capital gains in the same year, or up to $3,000 in ordinary income.
Take our lead.
Bottom line. As a general rule, you can continue to make stock transactions affecting your capital gain or loss for the year up until the last trading day of the year. If you want to claim a loss from a short sale, however, you have to act early enough so the transaction will settle by December 31st.
Thank you for watching. Please subscribe and hit the bell notification.